Hi, Peter. How's it going?
Dale, can you hear me?
I can hear you, buddy. Nice to hear your voice.
Fantastic to hear yours. Yeah, how are things with you?
Wow, so it looks like we're going to 2,700, 2,760 in the S&Ps before there's any correction, huh?
Well, I just pulled this up because this is a bit of an old forecast really now. I mean, we've done so much on the S&P to the upside since last year. Last year was very important in terms of the markets, I believe, because, and I tell you, before I go into the details on that, it's somewhat overlooked what I'm about to tell you. I haven't seen anybody else pick up on this, but you know, there was a grand resynchronization going on between developed and emerging markets last year. When the S&P was, you know, down here at 1810, we saw corresponding lows complete in things like the MSCI Emerging Market Index, and of course the commodities too. You know, because everybody was thinking that oil would go down to zero figures last year, and it was down at $26. But the turning point came, and that's from where the base of the oil price started to move up. But you see, there were so many different asset classes that were completing corrections all at the same time last year. Now, that's the first time that's happened since October 11, when the S&P was basically down here at 1074. Because during that entire interval that followed, right up until when the S&P developed this high around May 2015, there's been a dislocation between the asset groups, between things like the developed stock markets and commodities and emerging markets.
Yeah.
They'd all been, as you know, been working down for 5 years. So when we got to sort of January, February last year, we suddenly saw corrective patterns on the S&P. Let's mark that up. I'll just put this in red so everybody can see it properly. But we had this very nice simplistic 3 price swing decline in the S&P to 1810. And at the same time, we had oil prices, which began a much larger corrective pattern from their July 08 highs. That was the old record highs. They finished at $26 last year, but in the same pattern, basically a zigzag. This is an Elliott wave zigzag, 3 price swings down. And we had the same pattern on the emerging market index. And we had the same pattern finish in things like copper. We had oil, we had gold and silver complete corrections a little bit earlier, actually.
Yeah,
around
the end of 15, yeah.
December 15.
And you know what, and I will acknowledge that you called that turn in gold at 1050, and you were looking for a high in the dollar, even though we got one more high up there around 100, and you were bullish the market down there, looking for, at that time, it's been so long since I talked to you, when we were trading down there, I think your old target was 2220, but we were in the 1800s, so that was another great call.
Yeah, that's right. And later, what I thought was very interesting about, you know, the way that we've progressed since then is, of course, you know, the uptrend developed here. What I'm pointing to now was, you know, a retracement in June 16. And then, of course, we had this is the cash S&P, so it doesn't actually show it as the futures did, but there was a spike down when Trump was elected.
Yeah, we were limit down that night, Peter. Ever see them bring S&Ps back from limit down during an evening?
You don't see that very often in the S&P these days, do you?
I've never seen it. But, you know, I guess Carl Icahn left the party. About $1 billion worth of futures.
Well, I mean, that's, you know, that there were certainly some big positions being played that night, and not always in the right direction, of course. And but you know, what's endemic with all of this is that here we have lots of different, you know, what seems to be global news events that have potential to change the direction of the trend, but actually the trend didn't change at all. You know, it's been ingrained upwards in that direction since the resynchronization last year, and it's still going up. Now, a lot of Elliott wave analysts, they've looked at the slightly larger picture of the S&P. Maybe I'll show you that, because there's something interesting that we can share with everybody listening and who might be still interested in the S&P, is that let's just get an S&P
Boy, it's great to see your charts again, buddy.
Thanks. Yeah, I'm really happy to share these. It's great. Now, there's a little bit of an exercise in Elliott Wave I'm going to show now, which is this is the bigger picture, and I think that yeah, of course, I'm really bullish. There's a secular uptrend developing from the financial crisis lows, and it has to develop really into 5 waves. So what we find in mainstream Elliott Wave and by a lot of practitioners is that they describe 1 and 2 correctly, but they more or less put 3 here into the May 15 high. This is 4, and we're in a final 5th at the moment. But I really don't think that's likely. And the reason is that, of course, Elliott Wave has a few rules and quite a few guidelines, but one of the rules is that the third wave can't be the shortest wave. Well, but it's not the shortest if the 5th is shorter. At the moment, the third wave, this one here, is actually shorter than the first. Basis a logarithmic scale. Well, not many people are using logs these days, and you really should, because that rule applies to logarithmic charts more than anything. So I'm just measuring 100% value of wave 1 to its extremity there. I'm just going to add to wave 2. And you can see that when we got into the peak in May 15, back here, we didn't actually reach even equality to wave 1, which is unusual. Now, there's about an 80 to 85% probability that a third wave will be larger than wave 1. This one's shorter. So I'm not prepared to play those odds at the moment because of 2 reasons. One is that statistically and probability-wise, the odds that third wave is going to be shorter than wave 1 is you're playing a small 10 to 15% minority probability. The other thing is that if it was a third wave here, the 5th wave would have to be shorter than the third wave to ensure that the rules that Elliott proposed, that the third can't be the shortest wave in the sequence, is correct, is adhered to. But when you match up the resynchronization process that we had last year in 2016 with the MSCI emerging markets, with oil, and with so many other commodities and commodity currencies, you begin to realize that there's so much more upside potential in the emerging market index. And we can take a look at that if you like next, because when you've got so much...
Big move, and I'm interested in what you think, from people, in fact, let's see, who's that famous guy? Jeff Gunlich is... he has a pair trade where I believe he's buying emerging markets and short S&P, looking for a mean reversion.
That's an interesting trade, isn't it? I mean, as a spread, it's appealing to me. And in actual fact, this time last year, emerging markets were thumping up in a very strong outperforming role, but the markets weren't positioning for that. Because the markets had only just reversed in around February time, and 3 months later the market had outperformed, and that was just about triggering on the major global funds radar. They were just beginning to start thinking, yeah, we should be following this. This is a strong outperforming trend, and since then they've obviously exacerbated that trend, and it's been continuing outperforming since. And I think that's the right way to go. But I'm not sure I would put on a trade where I would short the S&P as a spread. Would you? I mean, it's not after looking at this. Well, I think if you work the numbers back, and we say, right, okay, I mean, we could talk hours for this about how I get numbers up here at 4,400. Actually, it's quite simple. But there are correlations on the very long-term charts as well, which correspond to these upside targets. But interestingly enough, if we go back to the financial crisis lows here, and if I go up to this extremity peak and extend by 1618, which is a standard measurement I use for a lot of different things, look at what we get. We get this blue line. This is the 4,400 number, 4397. And that technique of using a logarithmic calculation of the golden ratio 1618 there's a high recurrence probability that the S&P will eventually trade up to that. Of course, that alone is not enough. We have to look at the long-term pictures as well. If we're going to verify that as a valid number, and we perhaps would apply the same numbers to the Dow and maybe a few other indices to see if we get corresponding percentage increases as well, which is also important. Well, we completed all that work. It's been done 2.5 years ago, hasn't changed much since, and we're still on course to see a bit more. But the interesting thing is, no, I don't think that, it's not a bad thing to have an outperformance in emerging markets, and I think we can do that if we take the relative numbers of this, where the ultimate targets are.
Is that going to be a function of a weaker dollar, Peter? I mean, the big debate now was that 104 it for the dollar? I mean, we're challenging some uptrend lines that we've broken down in the Dixie a bit, and I'm wondering if that's going to be part of the formula, is a weaker dollar, and that's why emerging markets may outperform just based on currency, because they were getting killed when the dollar was strong.
Yeah, that's right. I think that's absolutely correct, actually, what you're saying there, Dale, because, let's take a look at the MSCI Emerging Market Index. Let's put it up here. Let's actually put the bigger picture up actually first. This is it here. Now you can see, and actually this chart is very interesting because it's a template for what I used to call the inflation pot. When the financial crisis lows came in here for a lot of commodity markets like copper prices, for example, and they pushed up into 2011 in 5 waves, which is typical of Elliott's configuration for perpetuation of an uptrend. You get a 3-wave regression here, as we see into the resynchronization dates of last year, in January, February last year, and then the trend has to move up. Well, what we're describing actually is just a simple zigzag pattern. So for those listening with Elliott wave knowledge, a 5-3-5 pattern is a zigzag, and we have very specific measurements for that. And we've also got to insert the zigzag into the larger picture. But long and short of the results of this, it means that we have a target somewhere up at 2050. Now, it might take another 3 or 4 years to develop up there, but I would say I have a very high conviction that we will see numbers like that. Well, let's just do the math. We've got 2050 as a target, and we're currently roughly 986. I'm putting this data in by hand, by the way, so it's might be a little bit out of date, but that's going to be a percentage increase of about 108%.
Wow.
108%.
Okay.
So if we go back to the S&P targets, let's go. So I should have saved that number, but let's just quickly go back to it. Okay, this is the S&P target that we had before. So let's get those away. And we've got basically 4,400.
Yeah, I mean, you have the most bullish targets I've seen. I mean, a lot of guys are saying we might be completing 3 here, and we get a 4, and then we rally to 29 to 3,200. But this is the most bullish count I've seen.
Yeah, it's not. I mean, so, this is an 83% gain.
Yeah, this kind of ties in with that we could be on the verge of another screaming bull market in U.S. dollar yen, of tremendous yen weakness and tremendous risk on, and all the yen crosses, et cetera, et cetera.
Well, I tell you what, the dollar yen is going to be a very interesting one to try and figure out. I'll tell you why in a moment. Just to finish this,
Okay.
Just because I don't want to give everybody illusions that it's straight up, to these numbers, because we've actually got, I think, a very important target here at 27.66 coming in later this year, and then I think we're going to see a drop down to about 21.70. But if I'm not mistaken, that's about a 30% drop. Is that right? 27.
Yeah. 20, 25.
Yeah, okay, 20, yeah, that's right. Okay, so it's a bit less than on some of the others that I'm looking at. But basically, that's a fairly hefty whack, isn't it?
Yeah.
So we have to be aware that, later this year,
Yeah.
once we get to some of the numbers, we're going to take a bit of a whack to the downside. And we want to obviously be aware that we don't want to be involved or leveraged into that move. We need to be out the market for a while.
Good point, Peter.
And let that come down, just so we're not putting any disguises in the very short term. I think that the markets are showing some divergence at the moment between the S&P, Dow, and Russell and stuff like that. So I'm actually updating our subscribers with a test at 24.13 this week, and then we'll take a look and see if it rejects, and if that does, then we're going to pull back down here before we go up again later. So these are very short-term movements now, but just to finish on that without misleading everyone, what's going on?
Yeah, well, you start with the telescope, Peter, and then you go to your microscope. That's your style, isn't it?
Yeah, I think so. I mean, I like to keep the charts, the Elliott wave counts, all synchronous. If something falls out and I can't figure out one timesheet into the next, then something wrong. So, if anybody's really practicing Elliott wave, my recommendation is to ensure that, you're looking at 4 or 5 time periods synchronously, and they've got to match up. Of course, you're going to have short-term variations in themes, which are consistent even within the next larger degree of trend. But I'd encourage everybody to look at long-term charts more, to get a fix, where you are in the ocean sailing around. You might see tons of islands, coming up, but you need to know roughly where your position and location is within that, and that way you'll get a much cleaner insight to what's going on than just concentrating on 1 or 2 time periods, for example.
Okay. Thank you, Peter.
So the currency situation...
Maybe we could touch on one currency that you have your eyeball on.
Well, I must admit that personally I'm still long dollars, but I think I might end up sort of holding on to them for a bit too long, because I'm not exactly certain yet whether the dollar can have one more flip to the upside. Now I say that because, in true honesty, because actually some of the critical levels are still hanging around, and I was hoping
97.5. Is that a big one for you?
It is. It's a very big number around that area.
Okay.
We know that from a larger perspective. Let's just have a quick look at a cycle on the dollar. I'm going to now show you our longest cycle on the dollar index. It's this one, which we operate in our on our semi-annual sort of video series, and this is a 187-month cycle on the dollar index, and you can see that we've got a fairly good rhythm of highs and lows, peaks and troughs, over the last 40-year period, and sometimes we get a very accurate turning point, like up here.
Were they like 8-year cycles between the two?
Yeah, it is. Yeah, exactly. It's
high to low, 8 years.
Yeah, they have a rhythm of 7.8 years, tops to bottoms.
Okay.
And they trip over sometimes. Like for example, here on the last one, which was back in 2002, we had it about 9 or 10 months early before the market sort of built this double top area, and then suddenly started to drop down. But it was about 9 months or 10 months early, and I think this is happening here because we're probably getting into about a year now late, and so the timing cycle for the dollar to start trending down is very late indeed. Now you could argue that if we go back to the high that we had in January, which is here, that the dollar is already starting to trend down. So maybe that would have coincided with a peak on the 187-month cycle.
That was the weakest bounce off those cycles, Peter. This recent bounce in the dollar, if you go back to that other chart. I mean, you had much more profound rallies at the black arrows on the bottom. This is the weakest one.
Yeah, this is very weak. Yeah, I see what you mean. Yeah, so you got this one. Well, this one here.
Huge. Yeah.
That was huge. That was a fifth wave in the long-term uptrend that dates back to the American Civil War.
Wow.
So as a fifth wave uptrend, that was very big.
Yeah.
Now this one is smaller because it's basically a counter trend rally in a downtrend.
Right.
Which
Same
this
thing
is
here.
too. Same thing here.
Because I remember eventually, Peter, that when you felt the dollar would top, you actually had like a 50 target for the Dixie. Is my memory?
Yeah.
How's that for a memory?
Yeah, no, it's right. Brilliant. Absolutely fantastic.
I mean, when did that interview had to be a year and a half, 2 years ago, but for some reason I can remember these things. Yeah, there it is.
Yeah, that's the one you saw. It hasn't changed, you see. That stuck there. So at some stage, we're just gonna, we're gonna top out and we're gonna go down big time. So this is basically, we're in a downtrend for the dollar. I mean, of course, people are, over the last 8 years, we've seen this, so you get sort of brainwashed in it for a while, unless you look at the bigger picture. But we're actually in a downtrend, and I suppose a few chartists will draw downtrend lines a bit like this, They don't quite work.
Or they show it as a breakout. If they do,
they probably have that as a breakout.
Yeah, it's a breakout,
I think I've got this one in I think I'm using this in a log scale. Most of my charts are log scale, so maybe it looks a bit different with a linear arithmetic scale. But anyway, the main reason for depicting this as a counter trend, which has come also very close to the original targets, is because when we go back to the March 08 low here, just before the financial crisis got underway, and we go to that peak there, if I double click, it's going to extend by 61.8. Well, it's no coincidence that we've already hit that number exactly. Look.
Yeah, 104.
Yeah. So the timing is getting critical now. So I'm not certain. I'm still holding on to dollars on myself, purely as a function that I'd like to see if it's going to break. I'd like to see a thrust below 97.50 here.
Okay.
There's another little chart which I'm working with where it's got again 97.53. This is support, where it could squeeze out a little bit lower and then turn up. But I want to see if to get really strong confirmation that the dollar's already in a major downtrend.
Yeah, it's do or die in here, isn't it?
Yeah, it is. We're going to have to break this number and then, really start punching through it hard. That's when you really know there's no question then. It's in a downtrend, and then you can jump in, and take that through, and you're then assured that you're always trading in the right direction. Wherever you enter it, whether you're a day trader or swing trader or an investor, in currencies, you're always going to be trading in the right direction. If you get any short-term pull against your position, you don't have to worry too much, because it will only be a matter of time before it drops. But you need, first of all, confirmation that we're getting a strong thrust below that 97.50 level. Yeah.
Okay, we've been eyeballing that. So, Peter, you did it again. Another great interview. Excellent views. I got to test my memory out to see if I was senile or I still could remember things. And I told everyone before you got in here that it was going to be there were going to be some outstanding views, and we did it again. I really appreciate it. If you'd like, you could show your website now and how people can get a hold of you and consider your service.
That would be great. Thanks. I've just put up this browser. Well, this is wavetrack.com, and if anybody wants to follow some of the things that we're doing, you can see that we put in twice a week some latest market commentary analysis. You can click here and read a bit. And sometimes we're putting in some interesting material for blogs. Some of our readers were looking at what do we qualify as reversal signatures. So there's you can always click on some links here to go to the blogs and read about articles. And if you'd like to get involved a little bit more and subscribe to our Elliott Wave Compass reports, you can just go down to here to EW Compass, and there's a bit of description about what's included in that report, and then eventually you can say order now, and it will take you to the link to subscribe online, and then you will get immediate access to those reports online, and you can even download a PDF which you can keep as a saved on your hard drive.
Okay, buddy. I really appreciate you taking the time out of your day, Peter. Good hunting, my trading warrior brother, and
Thanks a lot,
let's not have the kind of gap, like chart gaps that we've had in between our conversations last as long this time around.
No, it's great. We can do some regular stuff, and it's always great to catch up with you, Dale. I really appreciate it very much.
Okay, Peter. Everyone, Peter Goodburn at Wave Track International. So thank you very much, Peter, and good hunting. May pips rain down on you and your family, okay?
Great. Thanks, Dale. Appreciate it.
All right, buddy.
Adios.
All right, so F.A.C.E, that's a wrap. Hope you guys enjoyed the interview. Great analysis. Thank you, Steve Volge. Thank you, Blake Morrow. Let's see who else talked today. Oh, Dale Pinkert. He babbled for a little while. You're very welcome, Kevin, Barry, David, all my trading warrior brothers and sisters. Have a great, no music today. Have a great afternoon. Enjoy your spring day. Hi, Hardianto. LaShawn. Okay, and I'm a friend. Okay. Good to be friends. And I think we're going to have an announcement on the winner in a few days of the ForexAnalytix giveaway. And I know everyone's dusting off their desk and polishing their desk because they want those silver dice. So thank you, everyone, for hanging out. Nice trade, Armand. And we'll see everyone for Turnaround Tuesday, see what the market offers us tomorrow. Maybe the picture clears up and Blake has some conviction tomorrow. We'll see if we get a Turnaround Tuesday. I'll do a little scouting for a Turnaround Tuesday candidate. Yes, Daisy, all of our broadcasts, the session as well as the interview are recorded. Yes. Okay. Adios. See everyone tomorrow. Remember, don't just count your pips, Daisy, Vito, George, David. Count your blessings. See you tomorrow.